Hi everyone, welcome back to Frappe School. My name is Lynette Sharon and this is the third chapter in our Advanced Accounting course. Today, we will be discussing credit and debit notes. By the end of this chapter, you will understand what credit and debit notes are, create credit notes for sales cycle, create debit notes for purchase cycles, and allocate them to sales and purchase invoices as necessary. There may be times where a customer returns certain items after the invoice has been paid. In these cases, credit notes are important to allocate returns against invoices. A credit note is issued for the value of goods returned by the customer, and the amount may be equal to or lesser than the order of the amount. This credit note can then be used for future purchases, and the amount will be deducted from the pending balance whenever this credit note is allocated to a future payment or invoice. Similarly, we can use debit notes when we, as an organization, are returning items that we have purchased. Credit and debit notes are created against sales and purchase invoices respectively. Please note that when credit note or debit note is issued, it doesn't include refund.
To create a credit note, we need to have a payment entry linked to the invoice in the system. We can navigate to any sales invoice to create a credit note for it. Here, we can open the sales invoice for which we want to record a return, or we can even create a new one. Let's create a simple sales invoice first. For example, we are creating an invoice for an order of 10 chairs costing $3,000 each. We can select the items, rate, and all other details necessary. Let's save and submit this sales invoice. Now, let's record a payment entry for this sales invoice. We can create a payment entry using the Create button. Let's check all the details for the payment of 10 chairs in the payment entry document and save it. Now, let's say this customer decides to return 5 chairs. We can now create a credit note in this case. To create a credit note, we need to return to the sales invoice for this transaction and click on the credit note under the Create button. Once we do, the customer and item details will be fetched automatically from the sales invoice, and the Is Credit Note checkbox will be selected. Since this is a return, the item quantity and payment amount will be negative. Change the quantity from -10 to -5 as only 5 of the quantity is being returned. Credit notes are especially important when some items are returned. So, we can change the items according to how many were returned and then save and submit the document. Now, this customer can treat this credit note as an advance for their next purchase, and their invoice amount will be automatically adjusted. It will show in the customer's account in the ledger as negative. Let's assume we have the same customer purchasing more items. However, this time they will only be paying the amount that remains after deducting the value of the credit note. Let's suppose that customer brought 8 chairs this time. However, they would like to redeem the credit note balance for which they have already paid. Let's now create a payment entry against this new sales invoice. We can scroll down to the payment reference table. Here, we can see that the current sales invoice is already present along with the full invoice amount. We will need to add the previous sales invoice against which the credit note was created. The second row will show a negative amount since it is a credit note, and then we can see how much is pending after the credit has been deducted. We can refer to the difference amount between the first and second invoices and update the value as paid amount. This process ensures that only the difference amount is paid by the customer, and consequently the sales invoice is marked as paid. We can add a reference number and date for the payment and then save and permanently submit this entry. We can see that the invoice is marked as paid and the outstanding amount is 0. Similarly, we can also create and allocate debit notes for purchase cycle. Let's now explore debit notes. A debit note is a document that is sent by a buyer to the supplier telling them that a debit has been recorded for the items that are returned to the supplier. If any payment, partial or full, has been made to the supplier, we will also need a payment entry for it from the purchase invoice before creating a debit note. We can create a debit note from any purchase invoice. We can navigate to the purchase invoice list using the awesome bar. Here, we can open the relevant purchase invoice and using the create button, create a return or debit note. Once we click on it, a new purchase invoice will appear where we can see that the supplier and item details are already fetched and the return section has the original purchase invoice listed. In the items table, the item and the amount will be shown in negative since this is a return. Once we are done adding all the details, we can save and submit this. Now, this amount can be treated as an advance by us to the supplier for our next purchase, and our invoice amount will be adjusted. If we open the ledger, we can see that the debit note has reversed the impact of the purchase invoice. ERPNext also allows us to create standalone credit or debit notes that don't require to be created against existing invoices. The standalone invoices are only created when you have original invoice in some other software which cannot be migrated into ERPNext. It generally applies when you migrate from legacy accounting software to ERPNext. Let's try creating one.
This brings us to the end of the third chapter in the Advanced Accounting course. I hope this helped you understand what credit and debit notes are and how we can use them in our sales and purchase cycles in ERPNext. You can read more about ERPNext on docs.erpnext.com. In the next chapter, we will discuss payment tools. Thank you.